Great. Well, hello everybody. How is everybody doing today? Going well? Great. Fantastic. Mikhail, good to see you there. I've got some of my, sorry, Maxim. Got some of my colleagues here. Got a good room, good attendance. And we've got a sensational panel. My name is Phil Hopwood. I lead Deloitte's global mining practice. You may well tell by my accent I'm not necessarily Canadian, but I originally from the UK. I spent 28 years in Australia. I moved to Canada a couple of years ago. So I live in Ottawa, I work out of Toronto, and I really work out of a plane, to be honest. And so we're going to have a fascinating session for the next 2 hours. Boy, that's a bit of a bright light, I have to tell you. Are we okay with that one? Did you feel up to the spotlight there? Yes, that's right. So the nature of the session today, if I might just kind of go to that, is we're going to do, it's a workshop on basically doing business in Eurasia. By the way, I hope we've all sort of done our homework on exactly what Eurasia is. There's some quite interesting websites that actually give you some information on that. And particularly what we will focus on with our panel today is the Eurasia in terms of Russia, Kazakhstan, and Iran, I believe, as well there in Asia as well. So we've got some interesting insights there. What I'm going to do, first of all, in the couple of hours that we have together, is I'm going to give you a bit of an overview of tracking the trends, the Deloitte report on mining that we issue every year. This is the latest version, the 8th year of publication. So I'll go through that, and then we'll go to the panel, and I will then facilitate a conversation with the panel, asking them various questions. Right? And given we have an auditorium here of eminent people here who are all working in this sector, I think what we should try and do is make this an interactive discussion as well. Okay? If you've got any questions and the like, please feel free to ask those questions. One request that I will have, though, could I have a glass of water, please? That would be extremely helpful. Okay, right. So, who here in the room has actually seen and read our report tracking the trends? Oh, well done there. That's very
Every year.
Every year, yes, exactly. This is required reading, especially if you're from Deloitte. Thank you. Great. So, tracking the trends is a report, well, like I say, with the 8th year publication. What we try and do is kind of work through the major issues, the major trends that are impacting the market in mining. Right? And what we find is that, well, sometimes we'll put in our report new trends. And by the way, we have copies of the report here if people want to have a look at that. New trends, and so this year, for example, we put in a trend there around China. China's not actually a real trend, is it? I have to say. But it is so significant in terms of the mining marketplace that we decided to do a special call out and talk about that specifically. We're talking about tax as well. So, you know, hey, I'm from an accounting firm, Deloitte. Tax is very important to us, and it should be important to all of you as well, especially in terms of what is happening with the global reset around tax, is something called BEPS. What this means is governments are going to come for us all, and they're going to tax us all. And there will be no escaping, no hiding, no jurisdictions where you'll be able to get like 30% corporate tax, whereas everybody else has to pay 25%, 30 or 40%, whatever. There'll be more equalisation of that tax, and companies paying what is called their fair share of tax as well. Safe, health and healthy. The whole issue around safety. Now, safety is always a #1 priority in the mining sector. It really is. We all acknowledge that. And sometimes we put in, especially if there's been a particularly poor year in safety, we'll put in maybe a trend there around safety. But this year, the kind of slight twist on the whole issue of safety that we put in there was not the safety just of the individual, though of course that's important, but the safety of the organisation, so the whole cybersecurity, cyber risk issues as well. Okay? And then we find we have story arcs that develop in the trends as well. And I'll just talk about some of them as well. So energy. So in 2015, we talked about the new energy paradigm. Good consulting word that, by the way. But paradigm, the whole issue around energy and the desire to reduce project power costs because of the cost of power at the time and energy. But of course, now in 2016, we face a different marketplace around energy. But there's also this sort of shift around the whole energy mix about changing people around. Well, we have less dependence on coal, people move that more to renewables, solar power, which we've talked about, for a number of years now, but it's now really happening in the face of the reduction of energy prices at the same time as well. Innovation. Innovation's been around as a topic for a few years now, and in 2014 we talked about that for the first time. Then in 2015 we talked about the key to survival, how important it is, but it's more than just about cost. And then in 2016, bang, we talked about preparing for exponential change in this entire sector, because we talk about innovate to survive. Story arcs around cost and how important cost is. It's fascinating. We talk about cutting costs, I mean the cost of contraction, and now in 2016, our oil and gas colleagues, they've really had the oil price shock in the last year or so. They're cutting their costs, and they say, what do you do? So we had this in mining. We cut our costs 2 years ago, 3 years ago. In fact, it seems like we've been in a downturn for quite some time in the mining sector. But we all know that after a couple of years, you really just can't keep stopping the costs. You just have to do something. So what are you going to do? And that's where it does actually link to the whole innovation, but it's also about, when we talk about going lean, it's learning from other industries as well. And just in the last day or so, from a Deloitte perspective, we released a report, a second report on innovation. And we're talking about this very topic of innovation. How do we learn from what's called ecosystems? So please see me, by the way, and it's on our Deloitte website for more information on that. Supply and demand, so that's always been a topic in terms of the trends in mining. And now we're in this place of the new normal. What goes up must go down, and it must go back up again. But are we there yet with supply and demand? We'll talk about this further as I kind of go through this talk a little bit more. But what is so interesting around the whole issue of supply and demand is that people tend to look at mining in general, but as we know, it isn't around mining per se. We have to look at each of the individual commodities because they're all in different places right now. So if you're a gold miner in Canada or Australia, especially when you have the currency devaluation against the US dollar, because don't forget we all sell our commodities in US dollars, you're actually not doing too badly if you're a gold miner. And there are other miners as well who are actually not doing too badly either. Some of the base metals producers, probably not quite as good as the gold miners, but it's okay. And the outlook for some of them, nickel perhaps, though I never quite understand nickel, is kind of okay. Coal miners though, I don't know if you're a thermal coal miner when it's ever going to go back up. Iron ore, well, we had those massive swings in the iron ore price in the past few days, and I was told overnight it went down again. So yes, so supply and demand, and the ability, I think, of the Chinese in particular to play the markets is really playing now into this whole area. Excuse me. Okay, I think that's to do with the weather here, actually, with the change of season. Stakeholders, I've just been in a session for the past couple of hours now dealing with stakeholders with First Nations. And, excuse me. The whole issue around dealing with stakeholders and working with the complexity of stakeholders is now so important, especially with our new federal government as well here in Canada. But in Canada, we're not just talking about specific rights as they relate to First Nations, Aboriginal peoples. We're actually talking about the United Nations Declaration on Indigenous Peoples, which impacts us all. And when we were talking about here in Eurasia, when we talk about some of the countries that we're talking about today, let's think about that. I mean, how do we deal with the stakeholders in some of our locations? Because they have so many of the same issues that we're talking about here in Canada, and also a place like Australia. Capital funding, a really interesting story arc there as well. We sit here in an industry which is starved of finance. The traditional methods by which people raised finance for their projects, going to the banks, raising capital, maybe doing a share rights issue and the like, has changed. if you were to bring a sort of a schematic, an infograph perhaps, of where do people raise capital now, you'd have to bring in the EPCs, you'd have to bring in governments, you would bring in perhaps quasi-government institutions as well who are lending finance. You would bring in banks, you would bring in private equity. It is just a world of complexity now with raising finance, and the finance is available. I'm actually quite interested by how many people I've seen around PDAC in the last couple of days. So the investors are around. You know, last year I think if a few of us had put a few dollars into a hat, we could probably bought ourselves a couple of small exploration companies. I don't know if it's the same this year. I think people are a bit more bullish about the market, perhaps. Correct me if I'm wrong here, but I definitely feel a bit more optimism around the conference. So in terms of the trends, so 10 trends, we like round numbers, so you'll always see 3, 5 or 10 in Deloitte, and these are the trends. So I'm thinking what I'll do is, if it's okay, I'll spend about 10 minutes on this and we'll finish by about 1:30. Less than?
5 minutes.
5 minutes. Okay, I can flex this for wherever we want to go with this, okay? So I'll just give you a quick 5 minutes on these trends. And I would urge you then to refer to the report on this. But in terms of the trends, right? I've talked about operational excellence. You know, that's one that is always going to be on our agenda, especially right now where we are in the marketplace, right? I've just put it through. We don't just talk about the issue. We don't talk about the things. We also talk about some of the strategies that companies might actually adopt to cope with that as well. And what I like about the whole discussion around operational excellence is it links there to innovation. And this is really talking not just about the mines of the future. And one of the interesting things here is how the mining sector, because we're all full of mining engineers, of course, it just goes straight back to like technical innovation. But it's not just about technical innovation. It's around cultural innovation, changing thinking in organisations. So if you're a BHP Billiton, for example, BHP Billiton, the CEO, Andrew Mackenzie, stands up last Monday, he was at a conference in Miami. He stands up and he says 40% of his top 20 executives in the next couple of years will be female. And what that's about, he wants to change the thinking in their organisation. It's gender diversity in the organisation, questioning, innovate in your organisation. So it's a cultural change as well, as opposed to not just technological innovation. So we talk about that. We talk about China. Hey, maybe we'll actually be able to have a talk about China today in terms of Eurasia and some of the moves that China is making in the marketplace in which we're dealing here. But it is omnipresent in all of our thinking in this sector, because it is the world's number one consumer of the world's commodities. Adjusting to the new normal. We talk about the structural change and will the prices come up and commodity prices come up, and how do you do that? Oh, we talk about the clue here, by the way, is creating the agile organisation. How can you have an agile organisation? How can you have a mine that can produce at full capacity, but also can produce at say 50% capacity, that can flex up depending on the different commodity demand? Okay, energy mix. Energy is so important, but and even with the reduction of the oil and gas prices that we've seen, we're still working with companies now to really change their energy mix and move more towards renewable, sustainable energy, working with communities in that respect. Right? Engagement, stakeholder dialogues, how important that is. Like I said, I just came from a conversation, and people are not just saying that they want to be consulted about mining on their territories. They want consent. It's changing the whole dialogue there in this area. Fascinating. Capital crisis, the world of finance. That's actually the schematic. I really like this picture here because it shows the change of traditional and new financing options. And as I mentioned there before, where are people getting the finance from in many different areas, of course. Taxing, the old cliche there. There's only two things that are inevitable in life: death and taxes. And especially when we're in a world where governments, they need the money. Let's be perfectly frank. I mean, where is the money going to come from in any global financial crisis? And there are a lot of people who still say that we are actually headed for another deep dip of a financial crisis. If ever you go to a gold mining conference, by the way, you will always come out thinking you should buy more gold. And I was at one earlier on this week, and boy, you know, they talked about the triple fall of commodities going forward in the future. There's a lot to actually get depressed about, but luckily we work in the mining sector, so we're always optimistic. Okay, so there's a tax there. M&A. So that's an interesting one there. The market from mergers and acquisitions. So one thing I'll share with you is that for investment in the mining sector, if you're a company investing in the mining sector, there's two things that I've learned. You're either a dividend play or a growth play. For people to invest in you as a company, you're either a dividend play or a growth play. Dividend means you're actually going to pay decent dividends. And if you're not doing that, you have to have a growth story. If you don't have a growth story, you're not a dividend play, what are you? Who's going to invest in your company? And that's the reason why M&A drives growth. That's why the people want you to do M&A, but on the other hand, they don't want to do M&A because they'd rather have safe returns. And the reality is, let's face it, most M&A that's done has had perhaps suboptimal returns. But there's a lot of good bargains around the marketplace right now. And if you walk down the investor hall there, on the south side of the building, south side of the conference, you can see many of them there. Okay, and then cyber and security. This is a topic that always scares everybody there in terms of the advances in cyber, especially in cyber attacks on organisations and the changes around that. So it's not just around safety of individuals, the safety of the organisation. And I was in one session yesterday where people were talking about the many people actually click on those phishing emails. So you say we all receive phishing emails. I think the percentage in an organisation, and I've actually had this tested twice now, I think 65% of people click on those phishing emails. It's a truly quite astonishing. They click on that, and then on the attachment in the phishing email, I think it's around 35%. I think it's actually a bit higher in federal government, by the way. I just heard that one. So there are some truly quite scary things happening there in the world of cybersecurity. And the issue from the attacks where they originate from, places within Russia, sources within China. You know, why are people doing this? It's for information, for industrial espionage purposes. It's also compromisation of the individual as well. So that's the other part that maybe you could probably talk about that a little bit today as well. Okay, so I've gone through the trends at a breakneck speed. By the way, does anybody have any questions they want to raise? Yes, certainly. Yep.
I think your trends, based on the research that you do every year, are spot on. But I don't know whether you went to the Commodity Outlook on Sunday when Mark Bristow of Rand Gold spoke, and he said a couple of things relevant to your points. Most importantly, he said that this emphasis on M&A is no replacement for exploration. And conscious of my colleague Nick Fox, the Director of Exploration, sitting there close to you, I was very compelled with what he said. Because my interpretation of PDAC and what it represents, it's really as I said before lunch, it's a financing, not only a mining conference. So I just wanted to hear your view as to where's the balance between exploration and M&A, and it's a rhetorical question because I think I feel where the balance is, but I just wanted to hear from you and whether that came out in any greater depth in the research that you did.
Well, here's the thing with exploration and M&A. I mean, so traditionally, we've always had exploration. You know, in the up cycles, more exploration, down cycles, less exploration. M&A is a way of people to actually leapfrog the whole exploration cycle. I'll just take over your company, your asset, and then we can kind of move on from there. I think what is different right now compared to what we've seen in the past is that the complete falling spending on exploration. You know, I could show you charts that just show a collapse in investment around exploration. So you look at some of the commodities on which we all rely, And you know, the usage of zinc, the usage of actual thermal coal, by the way, is not going away anytime soon. And no matter where you come from in terms of sustainability and thoughts around that, the reality is that nobody really thinks that recycling renewables and like things like solar power, wind power, they're ever going to make more than 20-25% of any mix or an energy. In fact, the one that we're all kind of pretty bullish on, and I'm not just saying this because Sean's here, is uranium and nuclear. Because I cannot see there's any other option there, to be honest. But this whole collapse in spending on exploration, it just really concerns me hugely. If you go on to one of our favourite websites, of course, which is Wikipedia. I don't know if you're all going to Wikipedia. I spend a lot of time in airport lounges and things like that. You try and Google the world's 10 largest mines. You look through those mines on like I said, Wikipedia, the history of them, and you'll come upon things like the Super Pit in Kalgoorlie in Australia, Bingham Canyon Copper, in the United States, Escondido. Escondido is one of the newest, largest mines in the world, and that was first developed, I think, in production into 1996. So let's just think about that one here, because that's actually 23 years old. And some of these other mines, the super pits, have been going for about over 100 years. The reality is, we're living in a world of declining ore body grades and old mines. Where are the next Escondidos going to come from? Escondido, of course, as you would all know, is one of the largest copper mines in the world. BHP operated, it's 20% owned by Rio as well. I think it's Mitsui, some of the Japanese. This is the reality of our world.
You realize you've just set up the presentations, because where are these mines going to come from? Well, I think our panelists are going to tell you where some of these mines are and where more can be found.
Well, quite right. But also in a world, by the way, and so this is, to sort of set that context to continue with that, in a world where some of the larger mining companies have started to retreat, not all of them here, by the way, have started to retreat from some of these geographies because of perceived issues around risk and on whatever, country type risk and the like. By the way, this is an industry that has always kind of just shrugged its shoulders at those types of things, because that's what kind of you're doing mining. Okay? And I have to tell you that whenever I see articles on asteroid mining or deep sea mining, I just don't know what to do with that, because there is just so much of the world assets that we haven't explored in so many countries that you go to. Why the heck would you ever go to an asteroid mining situation anyway? But without further ado then, perhaps then we should move on. I'll just get to the end here. I think we'll finish that. Is this the... we finished with that? Oh, we'll just move on to... What was that nice picture they put there? Thank you very much. My colleagues there. Okay. Actually, I liked your picture that you had before. Okay, oh, never mind. So maybe we'll move on to the question part of the session there. Okay, I've lulled you all into a false sense of security there as I was droning on. But we have prepped slightly here, by the way. So I did share some questions with them, and so the approach I was going to take here was. I've got a couple of questions, and then I'm going to basically invite our panel here to comment on them. And maybe that's how we'll start. Is that okay with you? Yeah. So
sorry, folks. They also have presentations of some of them.
All right.
So I think I would prefer, if you don't mind, because a lot of work went into the presentation.
Yes, sure. Okay.
And then the questions can.
We'll do that. Yeah. Okay. So we'll do the presentations first. All right. So which one's the first one of that? Nick. Okay.
Thanks, Phil. It's my great pleasure to present today on behalf of Kinross. The last year or two, our VP has given this address, and so today we'll probably focus a little bit more on the exploration than he did last year. I'm going to briefly discuss. It works now. going to briefly discuss Kinross Global before focusing more onto the Russian assets, and then a little bit about the socio-economics of our operations in the Far East. Anything that I say may not be taken and used in evidence against Kinross. Our annual report, February 10th, 2015, contains all of the necessary cautions, assumptions, and risks. So, what was that, Anglo Gold? Kinross has operations on 4 continents. Our mines in Kupol and Dvinoy in the Russian Far East, in the top left, and in USA. We've lost actually something off the bottom of this slide.
It's starting to the slide.
Yeah. La Coipa's
In Chile.
in Chile, and Cassius and Chirano. We're still hanging out for a Canadian operation as a Canadian company. We have achieved the upper end of our guidance on production and on cost of sales, all in sustaining costs. Is there anything we can do about this? The size of the slides anyway. We produced 10 million, over the last 4 years, we've produced 10 million ounces of gold, having met our guidance targets every year for the last 4 years. Reduced our capital spend from a large $1.9 billion down to moderate amounts. Decreased our all-in sustaining cost by 10%, it's now less than $1,000 an ounce. And kept a strong balance sheet as of the end of 2015, before the purchase of Bull Mountain.
That's better now.
Yeah, that's better, thanks. So, in 2016, as we move towards looking at Russia specifically, in 2016, our guidance is for total production of between 2.7 and 2.9 million ounces globally, at an overall production cost of sales of $675. Okay. To $735 an ounce. If you look at the Russian component of that, it's 25% of those ounces are Russian ounces. However, the cost of sales is in the 400s. So those are precious ounces to the company coming from Russia. You won't be able to read that all clearly. What it shows is the 20 years of Kinross operating in Russia since 1995, and the mining is the darker green sections of those bars on the histogram. At the top you'll see Ergovium and Pepinvium, and a couple of licenses, Livomeshkireva and Shumny and Kitevamsky. These are changing away from the way in which we have operated previously in buying an advanced project and putting it into production, such as with Kubaka, Julieta, Kupol, and then finally Dvinoy, to acquiring land positions with an earlier stage of development, early stage exploration, and land positions around our assets, which we believe we can have potential to add resources, brownfields ounces, to the existing production bases at the Kupol mill. So we're seeing a transition in the company in Russia from buying an asset, mining it out, buying another one, mining it out, in terms of the way we've accumulated assets. Yeah. The last licenses we acquired, Alexei was talking this morning about the license applications, or what Lou referred to as the new claim staking laws. The licenses Shumni and Kitepanskaya, which I'll show you later on, are the first licenses we've acquired using the new legislation, and that legislation enables us to basically get approval for a license within a 1 to 3 month period. Okay, where are we located? We're located north of the Arctic Circle, in the far east of Russia, in Chukotka. We're 6,400 kilometers from Moscow, 1,200 from our own main operating management office in Magadan, and have a 430 kilometer winter road from Pevek port. Most of our logistics, our procurement effort is through Pevek, and has to be scheduled for summer shipping and winter transportation from the port to the mine sites. Now, there's been a transition from Kubaka days, when probably 80% plus of the items were coming in ships from Everett or from the west coast of the USA, to today, where some 60% is locally sourced, and Chinese makes up probably about 80%. I'm not sure if Eugene is here in the room, but he'll be able to correct me on the figures if I'm slightly off. Yeah. Our locally sourced come from Moscow to Arkhangelsk, and then are shipped to Pevek, increasingly. So, the mining operations themselves. With Dvinoy, we became the first company to get approval from the Russian government for a foreign company to own a strategic asset, following the federal process that Alexei described this morning, for a gold license of more than 50 tons of gold contained. We also, in Kupol, became the first mine in Russia that obtained the full cycle certification of the International Cyanide Code. In 2015, we mined 760,000 ounces of gold, which was the largest production that the mine has achieved so far in a single year, as combined production from Dvinoy and Kupol, both being processed through the Kupol mill. So let's take a look at exploration tenement. The red license in the center of you don't have it pointed, do you?
Yes, it's in the thing there. Press the
Okay. No, I feel more comfortable. The red license in the center is the Kupol mining licenses, and the Dvinoy and Vodorazdelny leases are up in the top area. The dashed white circle is a 130 kilometer radius around the Kupol mill, which is the area in which we believe that the potential is good enough to host supplementary reserves that could be trucked to the Kupol mill and build a hub-type concept operation. We already, of course, have a 100-kilometer haul road between Dvinoy and Kupol. The white licenses around Kupol here are combined licenses of the standard type, which we acquired at auction. Yeah. These two, Kitepa and Shumni, are the 100 square kilometre licenses that Alexa referred to this morning. And our 2016 work is going to focus on near mine at Kupol and exploration on these properties over here. Similarly, to the north at Dwainoi. Oops, sorry, go back. Going back is that one, is it? Yeah. Oh, what was that? September Northeast. This was a discovery that we made and converted last year to 70,000 ounces of measured and inferred resources at 32 grams a ton. This will supplement the declining grades at Dwainoi mine, and is being fast-tracked to production in 2017. Small but sweet. Similarly, Dwainoi Zone 1, in the old open pit, in the pit floor, we've established continuity of mineralization down dip, which is being tested currently and may be brought in next year. Our socio-economic footprint. 98% of our workforce is people globally speaking, are people from the local communities, and that's true in the Russian operations too. 80% of the value we generate through metal sales is spent in the host countries through taxes, wages, and procurement. As far as our contribution to social and economic development locally is concerned, there's 2,200 people are employed in our Russian operations. And taxes and other payments are $217 million in 2015. And local procurement of nearly $200 million. A significant part of our effort is with respect to the local indigenous people and stakeholders who are important to Kinross. And 70 million rubles have been spent on 84 local social projects in the Chukotka district. And a large number of those, but this is through the Kupol Foundation that we've established for a more structured assistance to the local communities. There's small and medium enterprises. If some of the locals come to us and have the ability to establish themselves in a small business, we'll support that business. One example of education is a lady who's put through, one of the local indigenous ladies who's put through a environmental degree, which enables her to participate with us as we review our, as the stakeholders need to be on side regarding our environmental issues that we have on site and the local communities down river from the mine. But just in conclusion, so Russia is a destination with great resource potential. The subsoil legislation, while complicated, we deal with it, and it's improving, as Alexei outlined this morning, in terms of transparency and general clarity, and better, and certainly making it a lot easier to acquire land and explore than was the case when I first got to Russia 10 years ago. Local authorities do provide support for investments that are going to make an impact on their region, on their district. Our Russian workforce, in fact, Russian people are skillful, well educated, and the workforce is efficient and innovative exceptionally, which is something that in many parts of the world is not the case. An open cooperation with the local community is very important, and that's a stakeholder buy-in to what we do. And we've put an enormous amount of effort into that over the years, with bearing very good fruit. I think Kinross's experience overall shows that it is very possible to invest in Russian mining and to succeed on a sustained basis. Thank you very much.
Next up, who we have? Sean. You're on. So Sean is the Director for Corporate Development at Cameco, the world's largest uranium, second largest uranium.
Almost, yeah.
Almost, yes. And fast becoming one of the success stories of the Canadian economy.
Thank you, Phil. A big thank you to CERBA to allow me this time to give you a little description of what Cameco is, what Cameco does, but more importantly, get on to the topic at hand, which is, our experience in Kazakhstan. No, green?
Green forward, red back.
Okay.
The big green.
The big green, thank you. So I'll give you 5 seconds to read this. Basically says most of what I say has some risk associated with it. So a very quick, here's what I'm going to do. I'm going to give you a little bit of background about Cameco. Uranium is a very small part of the overall mining industry, so not everyone understands what uranium is or what Cameco is, even though we played a leading role. But more importantly, I'm going to give you, our perspective of what doing business in Kazakhstan is like, give you some insight as to what the future may hold for us in Kazakhstan, and give you some overview of what we view as the opportunity, plus some lessons learned for us as we've been there, as you'll see, for a very long time. So as far as background, I would love to say that we were the largest producer, but that crown has been taken from us a couple of years ago, actually, by our partner in Kazakhstan, Kazatomprom. So we will now say we're the largest publicly traded uranium mining company in the world. And by that, we're publicly traded right here in Toronto on the TSX, and in New York on the New York Stock Exchange. And like a lot of other commodity companies, our market cap is there, $6.5 billion, so we're a fairly large company. But we were one day, pre-Fukushima, much larger. But what I would say about Cameco is we share some traits, I guess, with our Kazakh partner in that we are focused completely on the nuclear fuel cycle. I was telling Nicholas here before we started that, if I went back 10 years, Cameco had a number of investments, gold, diamonds. We've completely divested of all those non-core assets, and today I'd tell you we are all about uranium mining and the nuclear fuel cycle, adding value. So, I'm going to talk about Kazakhstan eventually, but we are global. In terms of mining, we are focused right here in Canada. Our core assets are located in northern Saskatchewan, McArthur River, Rabbit Lake, and Cigar Lake. We also have production out of the US, a couple of small ISR mines that use the same technology that we use in Kazakhstan. In fact, those were kind of an entree that we made before really becoming involved in Kazakhstan, was cutting our teeth on US ISR extraction. And so, of course, last but not least is JV Inkai, our joint venture in Kazakhstan. But beyond that, we had a little discussion about buy versus make. We actively explore throughout Canada and in the US. And in Australia, we've got a number of assets in the pipeline so that even though times are tough today, we are positioning for when brighter days come ahead. So I'm going to talk a little bit about more than mining because it's going to directly tie into my discussion around Kazakhstan in a few minutes. We are more than mining. If you were to go a few hours west of here, you'd come to Blind River, where we do a uranium refining, basically purifying the uranium concentrate that comes from the mines. which then gets shipped about an hour and a half east down the 401 to the beautiful little towns of Port Hope and Coburg, where we do uranium conversion and fuel fabrication. So we have technology, we have access to technology, and beyond what's on the slide, we also have an investment in, I guess, a joint venture with GE, General Electric, and Hitachi to develop what I would call revolutionary technology for uranium enrichment, so global laser enrichment. So we do look at the value-added aspects, and we are interested in vertical diversification. I'll bring that relevance to Cameco and Kazakhstan because we've been there a long time. When Kazakhstan gained its independence, we quickly sent technical teams through the stands to evaluate for potential for uranium deposits. And I would say our technical team came back, I guess the words are extremely impressed with sandstone-hosted deposits in Kazakhstan. And at that time of independence, they were a very small producer. They had really no access to the uranium market, so we eventually ended up in an agreement with a predecessor to our existing partner, KOTEP, where we provided some marketing assistance. And that was our real gateway, our foothold into Kazakhstan, and eventually that turned into a joint venture, the child of which became JV Inkai. And so our presence there has really been from the outset of really the start of Kazakhstan, whereby we've now explored, developed, and put into commercial production the JV Inkai mine back in 2009. So not only have we been successful in moving from exploration to actual production, but we've been able to actually grow production. Our original mine only produced 1,000 tons a year, and we've been able to double that to 2,000. So when we look at Kazakhstan, and I'm going to say uranium a lot, but you can substitute uranium for a number of other commodities. The endowment potential, the identified endowment potential for uranium is incredible. If you follow uranium, some people like to call the Athabasca Basin, where our core operations are, the Saudi Arabia of uranium. It's a bit unfair because I think there's actually two Saudi Arabias. I think that title could just as well go to Kazakhstan. And so when we look at Kazakhstan, we look at it with not envious eyes because we're already there. We already participate in that fantastic resource. But we look at it with a guide to the future, a place we want to be for the long term. So a couple of, I already hinted that, Kazatomprom is now the largest uranium producer. But the government, the support for uranium mining, basically took it from a, I don't want to say marginal, but a very small producer back at the time of independence to now producing 40% of the world's uranium. And Kazatomprom, our partner, as being a part of most of those operating joint ventures, has now evolved into the largest uranium producer, producing over 21% of the world's uranium. So in terms of success in mining, it's hard to find an analogous situation where a country really has promoted mining a particular commodity in that sort of, I guess, a conclusion where that kind of growth is, well, certainly unprecedented in our world. So when we look at the long term, we also see a partner that has similar values. They are focused on nuclear, they look at innovation, they want technology, they want to grow the same way we want to grow in terms of vertical integration. And of course, a country that brings its own technology and its own strengths. So from a partner-to-partner discussion, we talk very similar terms. We, I think, get along very well together. It's been a very successful joint venture. So future plans, and this is probably where the risk comes in. We've been clipping along at a comfortable rate, but these being what we consider tier 1 assets, we're comfortable continuing to produce. But obviously when the world comes around, and I'm not here to give a nuclear speech, but we think there's brighter days, we need production growth. We need increases at all of our tier 1 assets. So we've been in a series of discussions for a number of years. I already hinted that we've had production growth. 2012, we signed an MOA, memorandum of agreement, to actually double production again. So from 1 to 2, we'd like to take it from 2 to 4. And post-Fukushima, those dreams haven't been realized, but we continue to talk with our partner about the opportunities for growth and positioning ourselves for growth. And the way we would accomplish that is a number of ways. We continue to do exploration in just north of our existing production center in an area we call Block 3. Last year, we completed construction of a test leach facility. And for the next 2 years, we will be doing technical and economic work to prove out the economic viability of that deposit. So the steps are being set for growth in Kazakhstan for ourselves and for others. Now, linkage back in here, there's a price to pay, and it's a good price to pay in terms of, everybody wants access to Kazakh uranium. But the price to pay generally is you need to bring something to the table in terms of not just money, not just risk sharing, but innovation, technology. And that's where we think we have an edge. We are still in talks with our Kazakh partners, but again, the steps have been put in place. A nuclear cooperation agreement has been put in place between Kazakhstan and Canada that allows transfer of what some consider sensitive technology. And so we're still in the evaluation phase about building, I guess you could call it a replica of our Blaine River refinery in country. So for opportunities, again, uranium, but substitute any commodity you want that exists in Kazakhstan. It's a large uranium resource. It's 12% of the world's resource identified, and I think in terms of cost, very lowest quartile. Lots of people put, a $30, $35 market, production costs under $10. So in terms of however you want to equate to that, and for simplicity, lots of people take uranium numbers and try and translate them into equivalent gold numbers, but these are among the world's very, very best assets. But in terms of opportunity, it doesn't just stop at endowment, it's the support that we receive. So Kazakhstan realizes it needs skilled workers. 97% literacy rate in Kazakhstan. So as a result, we find a high availability of skilled workers. That is not the problem. Easily found, easily trainable. And in fact, we employ at the mine site 99% Kazakh nationals. And 97% of our supplies and services come from in-country. So it's highly supportive of mining. Almost everything you need can be found in country. What we also find, and it's evolutionary, we find a much more, how do I say this, a Western educated workforce, both in the public sector and with our partner. And so what that brings to the table is a partner and government officials that, I guess, more readily identify, but what drives foreign investors? What are their decision criteria? And so it's helping to, I guess, elevate that conversation, reduce the level of misunderstanding that may exist in the past. And not to be taken lightly, for the mining community, high degree of social acceptance for mining. We work very hard at that in Canada and enjoy a high level acceptance. And we see that inherent in Kazakhstan as well. And it's not lost on where we want to place our capital. So in terms of lessons learned, some of this is motherhood and apple pie, but nonetheless, I'll stress it. Partnerships, building good partnerships with your in-country partner. Kazatomprom is a government-owned entity. So not only they're our partner, but their owner is our landlord. So the importance of maintaining, or let's just say developing and maintaining that relationship is absolutely critical. Beyond that, it's your local partners, your suppliers, government authorities, making sure that your aspirations and desires are well known and that there's a level of trust built up over several years. Back in 1998, President Nazarbayev set up what we call the Foreign Investors Council, and what that allowed is for foreign owners to have a direct line of communication with the Kazakh government, express concerns, express interests in terms of which way they'd like to see. And we've seen evolution in terms of the mining code, tax code, in response to these concerns. So the government is moving to make it a more attractive investment climate. But comes to point number 2, patience. Things move, but they move fairly slowly at times. When we look at resource use contracts, which give us the license to mine, whether you're getting a new one or looking for amendments to one, typically 12 to 18 months. So it's not something where things move necessarily quickly. Open communication, that makes sense, but what I really wanted to focus on is the last bullet here, which is, this is something, maintaining and building these relationships, not something we do out of Saskatoon. I'm in Saskatoon, I make trips. I've been on the file for about 2 years, and I think I'm 6 trips into Kazakhstan. That was maintained that way for years. Finally, we made a concerted effort to develop in-country Chemical Kazakhstan presence, hiring locals, maintaining that day-to-day contact, building those relationships on a full-time basis. And in fact, in those 6 years, I would say markedly different results. So I cannot stress enough about having in-country presence. Very, again, similar story here, maintaining social license. So not only do we participate in activities through JV Inkai, but Cameco Kazakhstan now plays a role in terms of being supportive for local communities, providing donations for social infrastructure, and basically some of these things are scholarship programs, again, supporting of that education program so that we ensure a continued existence for our skilled workers and opportunities. And really all it's done is Cameco doesn't operate any differently depending where it's in Australia, Kazakhstan, Canada. We export that model throughout the world. But we're also not, or we're humble enough to say we actually learn in Kazakhstan as well. So we export best practice, but we've actually been able to modify and learn from our Kazakh partner, who obviously is very experienced itself in terms of uranium mining. So in summary, Kazakhstan plays a key role in our industry. Kazatomprom is a key player. They're a strong partner for us. But anyone who wants to do business in Kazakhstan, whether it's uranium or another commodity, needs to recognize that foreign investors need to be aligned. Our partner, Kazatomprom, is owned by a national wealth fund, Samrat Kazina. That fund has a broader mandate than just pull uranium out of the ground for a profit. So when you're doing business there, you must find that you're not only helping develop infrastructure, you're helping innovate, you're helping them diversify, and all under the guise of providing benefits to the local Kazakhs. We don't have local Aboriginal groups to deal with like we do. We are there working hard on behalf of all Kazakhs. So, Kazakh uranium, the story has been the story of uranium, much like China's been the story on the demand side. Kazakhstan has been the story on the supply side. But I would say, throughout that 2+ decades, we've had a very positive experience in terms of building a relationship and identifying an asset and benefiting from that asset, and will continue to do so for many, many decades to come. So I would like to think, we at Cameco say we have a good partner, both in Kazatomprom and Kazakhstan, and if we had a rep from Kazakhstan or a partner rep from here, I'd like to think that they would say the very same thing about Cameco. Thank you.
Thank you very much there, Sean. And next up we have, but it's not working.
Werner Clemens.
Werner Clemens. Werner, it's up to you. Do we have things on? Focus and pause. Next slides. Just close it there.
They here? Okay, just a green button, right?
That's supposed to go forward and that's supposed to go back.
This goes forward, right? Okay, here we go. That is back. Okay. Good day, ladies and gentlemen, and thank you very much for the opportunity at this CERBA event to give you a snapshot of Highland Gold mining. I also would like to congratulate all the women on this International Women's Day today. So Highland Gold, before I go on, I have to pay your attention to this, the usual disclaimer, that the following contains forward-looking statements. What is Highland Gold? Highland Gold is the #6 gold producer in Russia. We produced in 2015 around 260,000 ounces. We maintain a steady growth since 2009 with a compounded annual growth rate around 7%. We also are committed to maintain this growth momentum with our new development project in Chukotka, expected to come online into production in 2019. We position ourselves as a low-cost producer, and we also committed to returning capital to our shareholders, and for the past several years we have continued to pay a dividend. This is just for a slide for comparison where we position ourselves in terms of all-in sustaining cost and total cash costs. You see that we compare quite well with our Russian peers as well as our international majors. A few words about the corporate structure. We are listed on the alternative investment market of the London Stock Exchange. We have a free float of more than 50%. We have, our investors include a number of major high quality UK and European institutional investors. Our biggest shareholder is Millhouse, which is a Russian-based diversified asset management company. We, not quite recently, we have a new CEO, which is Denis Alexandrov, which came to us from Orient Mining, and he brings with him quite a wealth of mining experience. And in the following, I just show you where we are located. We have two regional hubs in the Russian Far East, with a third emerging regional hub in the Chukotka region. The first historic regional hub is the Khabarovsk region with the Monogo-Veshinnoye mine and the Belagoda mine, where we also have two exploration properties, Blagodatnoye and the area around Belagoda flanks. The second regional hub is the Chita region, where we have our Novoshirokinskoye mine, an underground polymetallic mine, and where we also have the Taseevskoye development project in the Balay area, as well as a small advanced exploration project called Lubov near the Mongolian border. And then we also have a foothold in Kyrgyzstan with our world-class deposit Unkotash. These are some of the operating highlights, which I'm not going to go too much into detail for 2015. As I said, we produced close to 263,000 ounces of gold and gold equivalent in 2016 at a realized gold price of around 1,150, a little bit more US dollars per ounce. The Novo underground mine showed a very good performance with a 20% increase in processing throughput compared to 2014. Belagoda is still ramping up and gaining more momentum. We increased the mill throughput 13%, and we also continue to improve the operating efficiency at this asset. I will also talk about later on about Kerkura, which is our flagship development project in the Chukotka region, not too far from the Kupol operations. And then we also have Taseevskoye, which has been in the company for quite some time, and now we undertaking a new scoping study which will involve the joint development of 3 assets we have in this region. Going into detail about our major assets, the main assets which has been the cash cow of the company for quite some time is Monogo-Veshinnoye. It produced in 2015 95,000 ounces of gold. The mine is quite maturing now, which is obvious from the declining grade. But nevertheless, so far the life of mine is projected to go through until 2017, and we are committed to keep this asset going. The mine is a major employer for the region. And how we are achieving this is by a strong focus on near mine exploration, which we plan to delineate new resources both for underground and open pit operations. And the way we're doing this is basically by we acquired a number of licenses surrounding our main MNV license. The most important license currently is what we call the Lower Horizon MNV license, which is the area below the previously state-approved GKZ reserves. They were limited to a certain depth, and now we have received a license beyond that area. And we already initiated a drilling program 9,300 meters in 2015, and we're continuing currently with another 10,000 meters, and we're quite confident we're going to delineate more underground resources to extend the mine life of MNV. Likewise, within trucking distance of the MNV processing plant, we have a property called Western Flank, which contains a China prospect. We already delineated a small open pit resource, And we also have delineated in 2014 a very strong geochemical soil anomaly, which we're going to test by drilling and trenching this year. So in a nutshell, we're still quite confident that we can get this MNV asset going for quite some while. Just 60 kilometers down the road, we come to Bela Gora. This is our newest mine, which started up in 2009-2010. We produced 61,000 ounces in 2015, which is quite an increase of about 63% from the previous year. And we mined ore about 2.2 million tons, and this in 2015 we put through the mill 1.5 million tons. Bela Gora is a challenging asset in a way, as the geology basically is a bit more complicated than what we expected. We have to deal with increased clay content as well as very irregular gold distribution. This is why the focus of 2016 will be really on improving grade control and boosting recovery rates. Now making a jump into the Zabakalya region, in the Chita region. Here we have our Novoshirokinskoye underground mine, which produced in 2015 106, close to 107,000 ounces. This is an underground mine producing polymetallic, producing concentrate silver, gold, zinc, and lead. This is quite a steady producing asset, and we over the years we have continually improving its efficiency and boosting its output. Currently, we are in the process of expanding on the underground resources, as well as further upgrading the processing capacity, which is projected to be 1.3 million tons by the year end of 2018. Kerkora. Now back into colder regions, into Chukotka, which is Kerkora is an asset. It's an intrusion-related, intrusion-hosted gold deposit, about 120 kilometers southeast of the center of Bilibino. This is a very interesting high-grade asset. It has currently a JORC-compliant resource of 2.9 million ounces at a grade of 8.7 grams per ton. It is envisaged to be an underground, a combined open-pit underground mine. Currently, we have a new JORC resource reserve evaluation in the framework of a pre-feasibility study going on, which we are going to release those results soon. But the resources and grades will be in a similar range as the previous evaluation. Highlights for 2015 include that we're going full steam ahead with development of this asset. We have brought material on site, getting ready for construction. In 2015, we also approved with the state around 62 tons of reserves, which basically paves the way, gives us the right to start mining. We also have completed a scoping study and, as I mentioned, a pre-feasibility study, also a detailed mine design study, results of which we're going to release pretty soon. As I said, this will be the future cash cow of the company, and we are aiming to get this asset into production by 2019. Currently, for 2016, we have planned additional drilling program of 25,000 meters, which is mostly infill drilling, and this is going to boost resources and resources at least of over 90%. Now making a jump back into the Zabakalya area, into the Balei region. Balei is a historic mining region, has historically produced around more than 15 million ounces. The company, we own 3 assets in there, which is Taseevskoye, the tailings of the old Balei operation, they're called ZIV-1, as well as a small underground mine, which is called Sretni Gorgatai. Currently, we have this asset for quite a while, and we admit this is a challenging asset because also in terms of metallurgy, also in terms of proving up the existing resources. Taseevskoye was previously an open pit mine, an open pit and underground. and the high-grade material has been taken out. The target is currently of mining the remaining lower-grade halos around the higher-grade material. Currently, we are undertaking a scoping study which will envisage a joint development of these three assets together. And at the same time, we're also looking at the possibility of trucking 4 to 5 gram to 6 gram material from Sredna Gorgatai for batch processing to the Novoshokunskoye mine. Now making a jump even into warmer regions, into western Kyrgyzstan. Here we have the Unkatash project. Unkatash is a 36-kilometer license which contains a 4-kilometer long mineralization zone where we have delineated a world-class deposit of 3.7 million ounces contained in 3 prospects. It's an intrusion-hosted, granite-hosted gold deposit. The metallurgy is quite okay, although it does contain a slight refractory component, but overall we expect recoveries in excess of 80%. As I said, it's a world-class deposit, so that's normally defined anything more than 3 million ounces, 3.7 million ounces. The grade is 1.7 grams per ton, of which 82% is in the measured and indicated category. We do have mining permits in hand for both Unkatash and Karatepe, and we are in the process of doing a complete reserve calculation for all 3 assets, which we're then going to register with the Kyrgyz state balance. We also see additional upside potential further along strike down to the southwest, which is the Baikonur prospect, which has previously been explored. There's a number of prominent soil anomalies which we still need to test, where we see some upside. Going back into Russia, just a few words, just touching on some exploration projects, development projects, which are of lower priority to the company because we are not such a big company and we have to be prudent with our capital allocation. We have Blagodatno, which is only 30 kilometers southwest of Belagorod. Here we actually already have delineated 15 tons of gold. It's not on the state balance yet, and in 2016 we will be undertaking an additional exploration program of around 15,000 meters, and we'll do all technical studies necessary to register a reserve with the state. And this property shows very good metallurgical characteristics with recoveries in excess of 90%. And we're looking at the possibility that this asset could potentially provide feed in the future for the Belagorod mill. In Chukotka, about 250 kilometers west of the central Bilibino, we have the Clone project, which is a epithermal gold deposit. It's steeply dipping. It has about 1.63 billion ounces in indicated resources with about a grade around 5 grams per ton. This will be eventually exploited by open pit. It shows very good development characteristics, has been very well explored and drilled off. Now currently this has been, as I said, has been put on the back burner a bit. We also own a license called Verkhny Krychalska around the Clone area, where we see additional upside potential, which we aim to realize in order to improve the project economics for this asset. And then Lubov, which you may recall is in the Chita region, about 12 kilometers from the Mongolian border. This is basically a mineralized granitic stock where we have delineated 15 tons grading around 1.3, 1.4 grams per ton. The latest results show basically that this material is amenable for heap leaching, and we are currently completed project design documentation and in the process of receiving necessary approvals from the regulators. These are our key goals for 2016. We aim to keep production stable at our 3 operations. Between the guidance will be 255,000 to 265,000 ounces of gold and gold equivalents. M&V will continue to see a very strong focus on near mine exploration in order to keep this asset going for quite a few years. We continue our work on the next stage of the Nova expansion in order to reach our aimed processing capacity of 1.3 million tons within a few years. As well, we will be improving the efficiency of the Belagora operation, and will go ahead with development studies at Taseevskoye Valley projects. And likewise, as is now the focus in all our peers, we will maintain our focus on optimizing our operations and cutting costs where it's possible. So, thank you very much.
So now we have, who's next, do you think? Are you there, Inish? Ah, Mikhail, great, well done then. Mikhail, the two then. Thank you. Copy culture.
Thank you for the opportunity to present the company, and good afternoon. So I will talk about the company called Copy Goldfields, and we're a Swedish company with the assets and operations within Russia. As a difference from the other presenters, we're actually a junior exploration company, and there is somehow a general belief that in order to operate in Russia and work in Russia, you need to be a big company with a lot of muscles in order to be able to properly speak and contract the government authorities. And I would say our example really opposes that. We have been in Russia for 9 years, and as an exploration company there were ups and downs, but we really had no problems with the authorities, never. We were registered in Sweden in 2007, and within all our operations are within Lina Goldfields, which is Irkutsk area around Boraya region. So far we have 11 licenses for the total around 2,000 square kilometers, which are split into 3 projects called Kopelovsky, Krasny and the Northern Territories. We have a market cap of about $10 million US, and we have around 4,000 shareholders who are mostly Scandinavian. So we have an excellent free float, about 60%, and excellent liquidity in the share, with a spread between bid and offer, which is quite uncommon for a junior company, of about 2%, sorry. And normally we have 3 to 4% of the shares traded per day. We have just completed $6 million US exploration program for the Krasny project, drilling 18,000 core boreholes. Lina Goldfields, the area we operate, we believe it's a fast-growing gold-producing area. It is very known as an alluvial area, and the first gold was produced here in 1842, so it made a gold rush before California gold rush and the Yukon gold rush. So far it is still an alluvial area with around 50% of gold still produced from the places. However, during starting from the beginning of the century, the bedrock gold production is picking up. The area is overall unexplored for bedrock gold. It's not underexplored; it is unexplored. And some of our there is a lot of alluvial mining going on, but for a large part of the area there was no so far exploration for bedrock gold at all. So there are a number of world significant gold production projects going on, And one is the mine called Verninskaya, belonging to Polish Gold. Second mine called Vysochayshe, belonging to GV Gold. And the area is also known for Sukhoy Log, which is one of the biggest undeveloped gold deposit with 60 million ounces of gold unlicensed, state-owned. So this is a typical landscape within the area, which is known, as I said, as an alluvial area. So with currently alluvial miners, they are reprocessing the tailings from the predecessors. So, and within alluvial area, we're looking for bedrock gold. All our projects are within bedrock gold. And we use the places as a direct indication for bedrock. And I have an example. So we have a Krasny project over here, which is actually sitting on the top of the hill. And there are 3 places around. And there are 2 more pretty close to us. And this is a typical for the area where Sukhoy Log is sitting and surrounded by places where both Verninskaya and Vysochayshe deposits 3 and 6 million ounces, both are surrounded by places. So places in the area is a direct indication, an indicator for bedrock mineralization. I heard a lot of arguments on that about mining and exploration in Russia, but our own experience, and it's 9 years of experience, is that Russia, in terms of mining and taxes, pretty favorable. So for majority of mining projects, if we're talking about gold particularly, they're not within the European part of Russia, they are in Siberia and south and far east. And in majority of these areas, mining is the only industry available. So if there is no mining, then there is no employment. That's why in all these areas, the local authorities, they're extremely supportive for mining. And whatever you need, basically, you always find a pretty friendly approach from the authorities. In terms of gold production, 4 out of 5 major Russian gold producers, they actually listed and founded outside Russia and registered outside Russia. In terms of getting production permits, it's pretty easy in Russia. It's, I would say, on average, between 6 and 12 months to get a production permits. And with the current ruble devaluation going on, the average operational costs, they are below $600 per ounce. And as it was mentioned, there is a lot of qualifying and, what is important, loyal personnel. So our strategy as a junior company, we were seriously hit by the decline in gold price starting from 2013. So we shifted our strategy. Instead of doing and financing all the exploration and production by ourselves, we're trying to do it with the partners. And also we have prioritized our targets. So we sold some of the properties for cash. We took partners to develop a Krasny project, which is our currently flagship project, and we terminated several licenses which we believe are less interesting. Krasny project, this is a greenfield discovery, so we took the license through the state auction in 2010. Between 2011 and 2013, we did initial prospecting and exploration. Drilled around 15,000 meters of diamond holes, did initial processing study, geochemistry and geophysical survey, which was finalized by JORC resource report, around 1.3 million ounces, mostly inferred and partially indicated. After that, we signed a joint venture agreement with GV Gold, and GV Gold the choice for the Russian partner was pretty easy. They have a production mine which is close to us, which is producing around 150,000 ounces, and they are commissioning another production mine also close to us. So they have a strong experience of production, which we as a junior explorer is missing at the moment. So together with them, starting from 2014, we have completed 2 weeks ago infield drilling stage 2 drilling program, 18,000 meters, did the further processing tests, and now we filed the Russian statutory reserve report and updating the job report. So overall, if everything goes right, we will be able to finalize feasibility by the end of this year. By the end of this year, we also initiate procurement of equipment, and by the end of the year, we will start preparing infrastructure for construction. And starting from the end of 2018, we target to start commissioning the plant to get the first gold in 2019. So with GV Gold, which is a 51% partner, we're pretty sure that we will be able to raise the finance needed, and they are very interested in developing the project going forward. We have a couple of other projects, which one is Kopelovskaya project, which we're looking for a partner. And this was the project which we started our history in the area. This is a quartz vein type of mineralization, not pretty large. So far we published slightly above 100,000 JORC resources with significant upside for the exploration. And the other project which we start developing from this year, this is greenfield exploration. The area I'm talking about, we are calling it Northern Territory, and this is the area in the north of Bodai region. So there is a lot of alluvial mining going on around, but so far there was not at all exploration for bedrock gold. If we look for the area slightly closer, you can see all these red streams. These are the alluvial mines produced under production. And just want to repeat, there was no so far exploration for bedrock. So obviously there will be, and we expect a number of discoveries here. So our approach would be basically to cover the whole area with different types of prospecting and exploration, consistently reducing the area, and in the end targeting to come in 3 to 5 targets for detailed exploration. And we will be able to do it within between 2 and 3 years with the preliminary budget of $6 million US. So far our capital structure includes several big shareholders, mostly coming from Scandinavia, and they represent Scandinavian private businesses. Liquidity, which I was talking about, and which is important for a small company. We have around 50–40% of shares traded through the stock exchange per month, and overall we are traded at around $13 US per share. So what we can offer, and why to invest in or partner with our company, we believe we have a very interesting portfolio of projects which are actually located within one area, so it's compact and easy manage. We have a project which is close towards production and feasibility, and we are sure with the partner it will be in production. We have another project with an interesting upside potential and with some resources possible immediately to produce, and we have an excellent greenfield property. We have a public listing on NASDAQ with full transparency and corporate governance and very good liquidity. We provide an opportunity to gain from the current Russian mining climate with the falling ruble, increasing gold price and very low production cost. We have about overall 10 years experience of managing Russian gold projects. We have a fully equipped operational office and provide actually an easy entrance to the Russian mining sector as a junior company. Thank you very much for your attention.
Good afternoon, everyone. I hope I'm not going to spend much time before the end of the session. I'll be very quick. We are presenting today Golden Hill Company with the asset in Iran. Why Iran? I'll explain you later. But this is a case study of Kazakh investor going international, and so the next 5 or 10 minutes I'll spend on that. Okay. The Iranian asset was acquired via a vehicle in United Arab Emirates, and it operates Aragunai gold deposit, which is located in West Iran, about 300 kilometers from Tehran. Project located is on geological mineral belt, and I'll show you the map later. Iran is ranked 15th major mineral-rich country in the world with potential reserves worth more than 700 billion. The team that operates it is a 20-plus years experience in gold heap leaching in Kazakhstan and Central Asia. And production of this asset started in 2015, which is, I think, is a good achievement, and that means the project was developed during sanctions time in Iran. Why Iran? As I said, Iran is one of the top country with reserves with mineral reserves, and the government of Iran is currently trying to improve and providing real measures to provide favorable business conditions to foreign investors. And it's actually now a good time to enter the untapped market. And as you know, in January 2016, the sanctions uplift started, which is a very good sign. And within the last 2 months, the government of Iran has been signing very, very large deals in various industries, and which shows a real move for this country. One of the attractions that Iran has, and I saw it in a survey made by macro advisory company, is FIPA. It's a Foreign Investor Protection Act, which has been introduced 2002, and it provides favorable conditions for doing business in that country, like investor protection rights and possibility of registering Iranian company with 100% foreign capital, transfer of principal capital dividend, profits gained from utilization of capital, how repatriation of funds happening, etc., etc. And it also allows to enjoy the same equal treatment as to local investors. And there are 3-year residence work permits for foreign investors, directors, and experts being issued. Just to continue, risk covered under FIPA is expropriation, nationalization, unlimited transfer of capital and dividend, and guarantee of purchase of goods and services. The operating license that is in place is benefits is government providing active support for project development, and government helps all necessary licenses and rights. And in exchange of that, there are obligations that investor has to meet. There are royalties as usual operating business, if you like, similar to what's been discussed this morning and this afternoon in the markets in Eurasia. A little bit about the team. The team is actually has a history in being listed in Toronto Stock Exchange under the name of Eurasia Gold. And it had assets in Kazakhstan and Central Asia. The history goes back to 1993 when they were pioneering and being listed on a stock exchange in Toronto. Then this company has grown, acquiring assets in Kazakhstan called MIZEK, and there was acquisition of Charred Gold Belt from Newmont, exploration asset. And then these mines were launched, and basically the history goes that it's been listed on a local stock exchange in Kazakhstan. There was a pre-export financing from Standard Bank received, and all these assets were consolidated with reverse takeover in Toronto, with a potential listing in London, and then it was sold to Kazakhmis. 100% stock was sold to that company. And so this very same team acquired the asset in Iran back in 2010 during sanction times, and it started producing at the end of last year. The first gold was produced. I'll show you pictures at the end. And the construction of CERBA, which was complete in 24 months with a heap leach conventional mining, that is a case study that we have in Iran. Just to give you an overview where CERBA is located, as I told you, it's located on a very well-known mineral belt, and about 300 kilometers from Tehran, as you see the sign there. And there is a very good potential for expansion in that area. So that's, is there any questions on that I can answer you later. The quality of the deposit, just to give you an idea, it's a single ore body containing oxide and sulfide ore with grades on oxide 1.78 grams per ton of gold and sulfide 1.54 grams per ton. The total resource is 158 million tons of ore at the average grade of 1.62. All open pit mining. Oxide resources is planned for 17 years with a capacity of approximately 5 tons a year. Okay. The key project considerations. Iran is actually has very well developed infrastructure. It's all gas supply for power, and there are paved roads at the very last village of the country. It's all government finance and so on. And the infrastructure includes a modern advanced hydrometallurgical plant with a capacity for 4 million tons a year. Robust environmental safety standards being followed, and the first batch of gold, as I said, was produced back in October 2015. The fundamentals here are quite straightforward. The good average recovery grade, 73 grams per ton. Operating cash costs approximately 390 to 400. So the current price gives you an idea of economics. Also, the company enjoys profit tax exemption for 10 years, and certain custom duties are released, so which helped a lot during construction phase. The expected annual revenues about 190 to 200 million. Just to give you some pictures, this is a heap leaching pad constructed. The infrastructure, hydrometallurgical, the generating facility. The conveyor line, which goes about 1,700 meters from all the way, and hydrometallurgical plant, which has been launched last year, and that is the first gold area bar. That's it. We just started, but I think it's a good start. If there are any questions, I'll be happy to answer. Thank you.
Four, but we can carry on with some wine to help us think.
So just checking in with our leader there in terms of the. We've got a few minutes left now for some questions, okay, and you know, questions from the floor as well. Thank you very much, by the way, for all the very interesting and informative presentations this afternoon. Really appreciate the insights there and the comments that we're generating. So in terms of doing business then in this part of the world in which we were operating there, some questions perhaps for the panel. Doing business in some of these locations that we're doing, you know, Kazakhstan, Russia, Iran, you know, some thoughts in terms of tips, advice for people looking to invest in those locations. Yeah, I mean, at a higher level, we talked through the generic ones there in terms of you know, work with your government representatives and stakeholders and the like. But are there any specific thoughts and advice that you might actually have for working in some of those geographies? Thoughts, Nicholas?
Should be on.
As There's one thought. Is that on?
Yes.
Yeah, it's on. Do you want to swallow it? I remember when I first got to Russia with a company that preceded my days with Kinross. There was a great amount of nervousness about trying to do business on your own without a partner, without a Russian partner. And I think I would say with some certainty right now that a partner can be more of a disadvantage than an advantage in the Russian scene. What one would need to have, though, is people in your organization who know the subsoil legislation, who know the people or get to know the people that you've got to deal with the subsoil agencies, and otherwise it's going to make life very difficult for you without a partner.
Any other comments, anybody? Sean?
Yeah, I would.
So,
Good. Okay. No, I would just add to that in terms of our experience in Kazakhstan is kind of echo what I already put in the presentation. It's understanding what's driving your partner. So I'd say understanding the landscape, because for us, it did take some time to understand that their way of thinking in terms of uranium development didn't exactly match up with ours, and being government owned, the broader mandate where they make requests or suggestions that from a purely commercial point of view can make a Western partner struggle for a bit, but in terms of satisfying that in the overall bigger picture, there are things that need to be incorporated into your business plan.
Moving on, perhaps, other questions there. So one of the things I was conscious of today when we talk about dealing with stakeholders, just before I came from a session there where we were dealing with First Nations and the like, indigenous peoples. Is that an issue that you find you're dealing with? I mean, I'm conscious of we're dealing with some fairly remote communities there, for example, in Russia. Is that an issue? How do you deal with the likes of indigenous peoples in some of those geographies?
I think I can answer. The area where we operate, the indigenous people, probably the Russian people. And that is, I would say, is common for Russia. Well, you don't have the initial natives, but because of the distance of Russia, it is so that the same people, the same Russian people, sometimes feel themselves as very local people. So if you're talking, you probably have this experience in Chukotka very strongly. And our experience is that, like, you have the European part of Russia, you have the Russian Far East, and these two areas really not often understand each other. So it's very much about, and even as a foreign company working in Russia, you're also working with the local people and then creating some understanding with them. And it obviously, it's not an issue, but you need to understand that and keep this in mind. And obviously, everyone has his own experience, but it's very important not to split the team between them and we. So it's like, it's one team with total genuine targets, and the targets are the same. You can't say that you here do that and we there do the other things. No, it's one team, and that's as soon as the people do appreciate that and understand that, then you have one team which can do one job.
Yeah.
Glenn?
We are basically, Highland is now going to set up an operation in Chukotka. This is, there are not too many indigenous people in Chukotka in general, because Chukotka only has about 50,000 people altogether. But nevertheless, this is an issue also for the company. Not an issue, this is something which our company is looking at, and we're having public hearings, and we certainly will be listening to their concerns. But where, for example, Kikura is located, around there, basically, there are no settlements of indigenous people or no migration route, something. So we are not, we do not have a direct confrontation. The only other issue what we needed to address were some archaeological concerns, because there were some sites of religious importance around, for the indigenous people, around our site, which we basically needed to address.
Yeah. Philip, if I may, sorry, Nicholas, this is an issue very important for Kinross. And in contrast with what we've just heard, Kinross's experience for more than 20 years has been very proactive in seeking out official representatives of indigenous people. We did this in Magadan when we started. We did it very intently in Chukotka. And there is, in fact, an expectation of perhaps not prior informed consent, as you said, as required by the Equator Principles of the World Bank, but there is an expectation of attention and respect. And I think our experience has been by speaking to the representatives of indigenous people. There are about 18,000 members of the indigenous community in Chukotka. We demonstrated that respect. And we have frequent community meetings and briefings. To this day, our Kupel Foundation is a self-managed foundation where the interests of all local residents are taken into account, and at least 30% of our support goes to indigenous initiatives. I have to say that Mikhail's comments were quite interesting because his focus was on the, if I understood him correctly, was on the team, that is the foreign investor and the local team, and why some Russian residents of the Far East feel that they're quite different. And this is an interesting observation because we have always tried to develop a single team inside our company with 98% locally engaged people. And it's that team that engages the indigenous community. And we very proactively recruit indigenous representatives. Our suppliers and partners, such as Sodexo, who does all of our catering at all of our sites, also quite deliberately seek to recruit local indigenous representatives of the indigenous communities. In Canada, we do this, or we don't mine in Canada anymore, but Canadian companies do this because there is an expectation based on treaty rights. In Russia, indigenous communities do not enjoy treaty rights. And so our experience has been, because we have initiated the form of cooperation, we've had a tremendous response from Raipon, the Association of Indigenous People of Russian Far North and Far East. And it's been a very good relationship. And we like to think that we've sort of set the standard for the kinds of engagement with the local indigenous communities that they would like to see, certainly, and it makes a lot of business sense as well.
Okay. Oh, thank you very much for that. Yes, please, a question.
Well, actually, it's just further on what Lou was saying. I used to work for the IFC in Yemen, and they had a pilot project in the mining sector. And I know Yemen is not exactly the mining hotbed that Russia is. But the pilot project was relating to stakeholder engagement, in the sense that most mining agreements are bilateral between the mining company and the government. IFC in a number of countries is looking at tripartite agreements whereby you engage with the local community, and the local community is a signatory to the agreement, so that everybody has obligations, legally binding obligations, that the local community commits to undertake to not to do certain things or to do certain things in exchange for certain very clearly defined expectations and rights that they have from the government and from the mining company. And I'm just wondering whether or not that is something that would be possible, or something that mining companies operating in these markets might consider as a way of engaging more closely with the community. Most of the problems that companies have in terms of halting of operations comes from disputes at the local and regional level. And would you think this is a way of mitigating that risk?
I'll speak from our experience going from Canada elsewhere. I mean, in Saskatchewan, we would refer to those as collaboration agreements with our northern communities. as you say, a bilateral agreement. The miner will do this, the communities will do that. And those are recently, a fairly recent innovation for us, less than 3 years old. But we've taken that model and exported it to Australia for our Kintyre project, where there we call it a mine development agreement, but that's, again, they're not trilateral, so we do our bilateral with the government, we do a separate bilateral with the communities. We haven't yet exported that model to Kazakhstan per se, but I would say, we have good experience in implementing that model.
Just to add to what Sean said, what we have found is to be very proactive with the indigenous community, to get their buy-in at the beginning, touching on what you said, really makes a huge difference. So when we're conceiving a new project at Kupol Mine, we bring the community in, the representative of the community in at front, and explain to them what we're doing. In fact, even have some of them educated at our expense so that they understand what we're doing, and then sign off on it before we get to a situation where there would be any conflict. So it's a bit like that, but not necessarily formalized in some written agreement.
No, I'm conscious of the time. We're getting towards 4 o'clock. Maybe just one last question to ask people. In terms of the investment in your locations, we've talked about some quite interesting success stories, some exciting success stories. In fact, I'm absolutely thrilled we had you here today talking about Iran. You realise the Financial Times is actually having a conference right now in London. One of my colleagues, Pierre Pettigrew, is actually there right now talking about Iran. So we are actually absolutely at the forefront of this thinking here. We deal in a volatile world, a complex world. Your companies have all managed to forge a path working in these geographies. If you were to give kind of your biggest sort of your main thought in terms of why you have succeeded and others have perhaps found it more complex, why is that? Just a thought there for each of you. How have you made a difference?
I think you just need to be a great believer in what you're doing. Because when you enter market, we came here just to say about this market, and we've seen not many people even think about this as a market, because it's been so forgotten or abolished. Oh, Iran is sanctions, but sanctions are, you can see there are quite a few countries that experience these things in the last year or so. But people continue, as King Ross this morning said, people continue working, and because people need to continue operate, and it's a big challenge to operate under these circumstances, but I think that's what it makes more challenging, and then at the end the reward that you get is there. So that's all.
Nicholas?
Yeah, 20 years of history in mining in Russia suggests that Kinross has got something right. Good ore bodies to start with that can sustain a lot of extra expenses at times have been helpful. A lot of patience and inclusivity, I think, of all of the stakeholders concerned, such as the Chukotka regional government. They have concerns and interests. We're a significant part of their tax income on an annual basis. So we have mutual self-interest, and we can support one another. That then gets one stakeholder on board with what you're doing. Similarly with the local communities and with the local procurement people with whom we could be held hostage if we didn't have good understanding, good relationships. Patience and more patience.
Yeah. Okay.
I was just going to add, I mean, our experience, I would like to think that we're successful because we're nice Canadians, but that might get you in the door. And beyond that, it's what value you're bringing to the local economy. And I would say probably, I'm going to guess here, the Canadian gold companies in the room probably experience this. We don't have government envoys going to these countries advocating on our behalf. It's up to the company itself to kind of carve out its niche and well, I guess, prove its relevance, prove its worth to maintain and grow within that country. And so in our sphere, our industry, we compete with Russian nationals, French nationals, Japanese nationals, Chinese nationals, state-owned enterprises that are competing for these same resources. And so we do it by being a reputable partner. We live our values, we don't compromise, and they see us as, I guess, a valuable partner in that respect. So it's being a good partner, and for us, I mean, we still have that competitive advantage about bringing technology. So we're in a bit of a unique sphere, but again, without a government advocate on our behalf, we have a very competitive landscape in Kazakhstan.
Good. Thanks, Sean. Mikhail?
Talking about survival, I would say survival is the nature for the junior exploration company operating during these cycles. We succeeded, I think, based on two major aspects. The first is the team. You always keep certain key members of the team with you and with your ideas and with your values. Obviously, the team might change, but there are certain key players who need to stay. And the second part of that are the shareholders who really support you and sometimes really don't understand in you, but do support you long term and support you through good and bad things going on.
Thanks, Mikhail. Werner?
Yeah, I think there's no unique answers which can be applied to many mining companies. It's also very specific to every mining company. For example, we were lucky to start with to have good assets, which M&B was a good asset. It had in the early days a grade of 6-7 grams per ton. That helps to weather out any crisis. Then for a few years we had Barrick on board. There were some exploration joint ventures. So we inherited in ourselves, basically, we got a few good quality exploration projects which we were able to move forward into development and into production. Then I would say for our company, at least, very prudent capital allocation, not really operating at the edge, basically where you have a high debt ratio. For example, you always have something, you have your nest egg somewhere, you can do something with it. Which helps weather the storm, and I think last not least, currently right now the operating expenses are really down. Basically, that also allows many of the Russian companies really to go for lower grade material, which otherwise, if the ruble would not have been devaluated so strongly, we could not be mining that low grade material, which we're mining right now, which applies probably for several companies like Petropavlovsk. I think GB Gold as well. Also, when we look at M&B, we're mining underground 2.4 gram material, you know. Yeah. But because fortunately, unfortunately, the ruble is relatively low, and we're selling gold in dollars. That really helps us to weather out this storm, and it looks like gold price is picking up. So everything will be okay.
So words I heard there were belief, patience, partnering, support of shareholders, good capital management and allocation, and also, to be honest, cheap ruble as well. So I think those are all words to ponder. Great. Really appreciate the time and effort you put into this afternoon as well, and thank you for the opportunity to spend some time with you today. Thank you.
Thank you, Philip, for taking on the task of moderating this afternoon. Our ranks were thinned, but I think the quality of presentations was just as high as this morning. Thank you to our panelists. Great stories, a lot of unique insights, but a lot of commonality. Success tends to congregate, and the factors for success are surprisingly common. So thank you once again. Now, before we retreat to the back of the room for some wine, we have a visitor from London, and and also a partner of CERBA's, Arthur Polyakov, who manages perhaps the best mining show held in Russia called Minex. And his empire is growing because he has Minex Central Asia, he has Minex everywhere except in Canada, where he doesn't dare compete with PDAC. But Arthur would like to make a very brief announcement about a survey that they're launching, which I think will be of interest to everyone. Arthur.
I will be very, very brief. As Lou mentioned, we are a growing empire. We've been in operation for 12 years, trying to follow and promote mining across Eurasia. We started in Russia in 2005. Then went to Central Asia, added to Minex brand in 2010. We actually in between launched platforms in China, in Tianjin, in Beijing, and most recently last year actually we added Minex Europe. So basically we are this vessel actually which connects China to Central Asia to Russia and then to 28 European states. And this conference actually addressed one very important question of perceptions of doing business in particular parts of the world called Russia, Central Asia, and we're actually trying as an organization an experiment trying to measure the perception and put that this perception in some kind of survey, which we are organizing and launching alongside the conference which we are holding in Astana in April. So I would like to invite everyone actually here to participate in our survey. The more the merrier, and the results of this survey will be announced at the conference on the 21st of April in Astana. The time the cut-off dates for to participate in is 8th of April. It takes about 3 to 4 minutes to complete, and the winner actually will get a prize that size of gold coin. I can't promise you, but it's going to cost about £5,000. Oh, sorry, $500. Sorry. Okay, so if you have any questions, please come to me and I'll explain the details. Thank you very much. And one more thing, we as a media partner for CERBA, we actually been recording this meeting, so we'll process all this video and put it on YouTube, and we'll share it with the colleagues at CERBA. So if you actually miss some of the presentations, you'll have a chance to kind of recap. Thank you.
Thank you very much, Arthur. In closing, as chair of the conference, I would like to extend warm thanks to our volunteers, to CERBA's staff. As usual, you've done a phenomenal job. The organization was great. It's incredible how close we are to our allotted time. And I hope that I was right when I said there's wine at the back of the room. Yes, there is wine. I think we all deserve at least one glass of wine. Thank you all for attending. And please don't leave. There's a lot of opportunity for networking over the next hour and a half or so. Thank you once again, and I hope to see you next year. Bye.